This is video lesson 1 explaining how you can use monkey cycle trader or castaway cycle trader indicator in your day-to-day trading. Supercharge your trading, use our proprietary trading view indicators to get an edge over millions of other traders. You can start your trial at www.monkeymakesmoney.com. So that first video lesson will explain you how the indicator processes price data and produces identification of an underlying cycle that drives price, as well as hidden support and resistance levels. So this is what you normally see on the chart if you do not use any tools. You can see that in that particular example, the stock Mara was trending, going up from around 27.40 to 31.60. But what I would like you to pay attention to is that price did not move from the low of the chart in the left lower corner to the top in the upper right corner in a direct line. It was moving up and down, up and down, up and down. And if you are a trader, especially if you are a day trader, this is what you would like to catch. You would like to catch those intraday moves. And we can use a standard zigzag indicator, which would highlight for you those swings. So we call those moves up and down like swings. So you will see that price moves in zigzags all the time on all the charts on any time frame. A move up to a higher high is normally followed by a move in opposite direction. And we call those moves in opposite direction pullbacks or corrections. Those zigzags, what I mean is that like A up, B down, C up, A up, B down, C up. Those zigzags reflect natural rhythm of price moves. It's like in dance, we make one step up, one step back, one step up, and price moves in those zigzags all the times. So what is a trending up market? When price keeps making a sequence of higher highs and higher lows, we say that the price is trending up. You can see that every push up manages to make a higher high. So here it was a lower high, a pullback, bears came up, we got attracted by a higher low, we started to buy, and we finally pushed the price to a higher high. So the high of that swing, of that move up, is higher than the high made by the preceding swing. And look what happened next. We get a very quick, only 3 candles down. This is a pullback, counter trend move, but it got stopped here on a level higher than the previous low, and it made a higher low. So now you see a sequence of higher lows. That low was higher than that low was higher than that low. And the next push higher makes a higher high, because every time price makes a higher low, more and more bulls are getting attracted. So they see that they kind of get confidence that price would keep moving higher, and in contrast, every time price makes a higher low, bears are getting scared. We do not longer want to short that move up. And in that particular case, we can see that price kept moving down. So that is so-called trending down market. When price keeps making a sequence of lower lows and lower highs, we say that the price is trending down. You can see that low was lower than the previous low, and that high made by corrective pullback, made a much lower high than the lower high made by the preceding pullback. That's very important. This is how we identify direction of the trend. This is how we identify what direction we should take trades. So lesson 1, key takeaways. When price is trending down, the best trading strategy is to short counter trend moves temporary pullbacks. So you don't want to buy here, you don't want to buy here, you rather want to short here. You can see that every pullback is weaker than the preceding push down, and that actually manifests what is the prevailing market direction. And in that particular case, you can see that the prevailing market direction was down. So by shorting, you would take less risks of getting stopped out and of losing money, because the trend would be your friend. And in that particular case, the trend was down, and by shorting, you would take leverage of the existing momentum, of the existing downtrend. Second, when price is trending up, the best trading strategy is to buy counter-trend moves, temporary pullbacks. Let's come back to that particular example, and you can see that we dealt here with a very well pronounced trend up, because we got sequence of higher highs and higher lows. And again, it did not make sense here to short that market, because when market keeps making higher highs and higher lows, the trend is your friend, and in that particular case the trend was up, and it would benefit you only if you try to buy pullbacks rather than trying to fade those moves up, rather than trying to fight that existing trend up, that existing bullish momentum, as traders say. I need you to read that important disclaimer. The indicator suggests trading setups and alerts that are for educational and hypothetical purposes only and shall not be considered trade recommendations. Any signals or trading setups drawn by the indicator is not to be construed as an offer to sell or the solicitation of an offer to buy, nor is to be construed as a recommendation to buy, hold or sell, short or otherwise any security. All users of the indicator must determine for themselves what specific investments to make or not make, and are urged to consult with their own independent financial advisors with respect to any investment decision. Castaway Trader LLC, the publisher of this indicator, is not registered as an investment advisor nor a broker-dealer with either U.S. Securities and Exchange Commission or any state securities regulatory authority. Past results are not indicative of future profits.